Alrighty, looks like we are live. Hello, everyone. Good afternoon. Thank you for joining us. I'm looking forward to sharing the Augusta Rule tax strategy. This is one of our upcoming series in Keep Your Profits. This strategy is my personal favorite because it yields the three magic words that we all love: tax-free income. Thank you so much, guys, for joining. I see that some of you guys are still joining in. Thank you, thank you. Come on in, come on in. I hope that you find this presentation valuable. You walk away with some really valuable nuggets to help you all save some money come tax time. Now, you guys are all fresh from paying your tax bill for 2022, and that's probably why you've joined this webinar, and I appreciate that very much. I feel you. I understand. Most of our clients that come and see us at FCF Consulting Partners are precisely for those reasons. They feel that their CPAs or their tax preparers, although they're great and fine and dandy, they haven't really done the best job in helping them save some money on taxes. Well, here we are, and here we are to help you. So I'm going to tell you a little bit about myself. My name is Ray Mejia, founder, CEO of FCF Consulting Partners. I serve as virtual CFO and lead strategist in accounting and tax planning. I work with a wonderful team of very intelligent, much more intelligent people, I'd like to think, than myself on the accounting and tax side behind the scenes that help me make a reality of the strategies that I develop with my clients. FCF Consulting Partners was born resulting from a little over a decade and a half of working across in banking, across the banking channels of consumer, business, and wealth management. I identified that there was a lack of a strategic advisor for my business clients, and the industry doesn't necessarily cater to that need. And I saw that as a gap that I wanted to bridge, bringing together my expertise in accounting and finance and wealth management and advisory to my business clients that I had served for well over a decade and a half. Today, we're going to talk about a few things that I think will be very insightful, or at least I would hope. At a minimum, you walk away with some really interesting questions. What is this Augusta Rule? Is this thing even legal? Who qualifies? How does it work? What are the pitfalls to avoid? Give me some examples, Ray. What kind of supporting documentation do I need to have for this thing? And if I don't want to do this myself, Ray, how can we work with you and your team? So let's get to it. The power of the Augusta Rule. This is only one of dozens of tax planning strategies that we have in our arsenal for our business clients, and I think that you guys are really going to find this this one particularly interesting. Like I said, it's my favorite. The Augusta Rule is essentially, on the business side, an opportunity for you to take a deduction of a qualified business expense, and on the personal side, it's tax-free income for you. The nuts and bolts of this is you got up to 14 calendar days to rent your home out to your business, your primary residence, that is, and we'll get into those details shortly, for no more than 14 non-consecutive days in the year. How interesting is that? So, let's talk a little bit about, who qualifies for this thing. The Augusta Rule essentially is for individuals that own their own homes and they are business owners. And said business will rent said home from said homeowner, which happens to be the owner of the business, following the IRS rules for tax-free income. So what's an example? Let's take John Smith, a genuinely fake person, whose business is Smith Technology, a genuinely fake business. For obvious reasons, we've redacted what is truly a true case of one of our clients, actually here locally in South Florida. Mr. Smith is a owner of a software as a service company, a SaaS industry provider. He provides software that he licenses, and that license software income is the income that his business generates as revenue. He has developers across the country and across the world, and we helped him leverage his home for the purposes of tax-free income using the Augusta Rule. He was able to genuinely quantify $24,000 in tax-free income resulting from this. Now, who qualifies for this thing? It's pretty simple, pretty straightforward. Who qualifies for this are business owners that are also homeowners. And Ray, if that's who qualifies, how does this work exactly? The business rents the home. The homeowner receives the income. The business pays, obviously, and records the deductions and the accounting. And the homeowner, as a result of receiving said income, is going to charge, or excuse me, to receive said income is going to charge the going marketable rate that he would rent to his own business or any other business for the use of their home. Now, Ray, what are the rules in the book that we need to follow? The Augusta Rule basically states that the homeowner must charge the going market rate. It could be done pulling local comparables, and the homeowner must keep records, and the business owner, which are one and the same, must keep records to justify this business expense. The legal entity structure does need to be followed. It needs to be an S corp, a C corp, or a partnership. You could also be a single member LLC, but you can't be a self-employed individual. And how it works, the formula is basic arithmetic. So you take the local going rental rate for your property and the number of days that you're going to rent it for, and justifiably so, we're holding this webinar towards the end of the calendar year, and that's because most of you folks want to maximize your tax savings. So there are 14 calendar days that you must non-consecutively book for to maximize your Augusta Rule between now and December 31st. And that equals your total deduction. The pitfalls to avoid are simple. Avoid charging a rate that's unreasonable. Avoid not keeping accurate records. Avoid renting your property to your business for more than 14 days, excuse me. And avoid failing to meet eligible requirements. You avoid those 4 things and you're going to be as good as gold. So, Ray, what are some examples? Listen, there are tons of examples. I'm going to narrow it down to the 2 most common for a business owner that would want to quantify savings using the Augusta Rule. You're going to hold a business conference in your home or a business meeting in your home. Again, said conference or said meeting must be documented, and it must be held within no consecutive period of time, not to exceed 14 days between now and the end of the year. Ray, what's the supporting documentation I need to have so that I don't get caught by Uncle Sam? No worries. Rental agreement, do your market research, charge the going rate. There are tons of websites you can do that. Record your rental income, record your rental expenses on the business, show proof of eligibility, and make sure that you're holding some sort of a meeting document or maybe even photos or videos of said meeting or said holiday party, wink, wink, having been held at your home with your employees. Now, of course, this might seem trivial to many of you. Ray, I focus on making money running my business. This is just not something I feel comfortable doing, but I see the value. Well, hire my team. What a coincidence. That's why we're here. You can work with me and my team, and we can show you how you think your CPA is saving you taxes and how we can actually save you tons more. And that's the metaphor that we have illustrated here with this iceberg, where the tip of the iceberg is what your CPA or your tax preparer is helping you save. Because guess what? Your CPA or tax preparer isn't concerned with primarily saving you money. They're concerned with primarily following tax filing compliance. Yes, that's right. Your CPA is concerned with compliance, not with saving you money on taxes. And you know it, and he knows it, or she knows it, and you guys just don't talk about it. And they don't charge you enough for it. So the conversation's never had. We can actually help you save tons of money on tax with tax planning. Now, let's talk a little bit about how we can work with each of you and how we will manifest this tax plan. Guess what, guys? It's super simple. Retirement deduction, retirement planning, deductions, legal entity structure optimization, insurance, loopholes, and there are tons of them. The Tax Cut and Jobs Act, but Ray, that was signed into law in 2019 and put into effect in 2020. Guess what? There have been updates. Niche specific strategies for those of you who are physicians or in the aesthetic medicine services or food and beverage or restaurant groups or funeral homes or software as a service. Guys, tech companies, there are tons of niche specific strategies that we can bring to the table for you that will unleash an exorbitant amount of tax savings for you. Inflation Reduction Act, which is just recently signed into law by the Biden administration, and there's tons of new tax policy on the horizon. So we'll assess each of these for you, helping you guys maximize, truly maximize your tax savings. Schedule an assessment with me personally. Calendly.com virtual CFO Ray. That's calendly.com/virtual CFO Ray. No cost, no obligation, no hassle, no BS. Let's do a quick assessment. Let's figure out if there's any way for us to save you some money. And if there is, you're going to love yourself for it. So that's it. That brings it to the end of this webinar. This is supposed to be short, sweet, simple, precise, concise, and to the point, helping you guys walk away with some valuable insight. I want to thank you all for joining. I see there aren't that many questions. Jane's asking, how does the money move? Very simple, guys. It's all in the accounting. The business creates a bill. The business pays that bill. The recipient of that bill payment is you individually in your personal checking account. Jane, if you want to go into the weeds with it, please book a strategy session. I am happy to do that and give you some pointers. I see Greg is asking what type of property. It doesn't matter what type of property. It could be an apartment, could be a home, it doesn't matter. As long as it's your primary residence, the going market rate, no more than 14 days non-consecutive from the year, and you're going to be as good as gold. Guys, I want to thank you so much. This brings us to the end of this webinar. Ray.Mejia@FCFConsultingPartners.com. You can also call or text me at 786-475-7735. But book a strategy session. What's it going to cost you? It doesn't cost you anything. Calendly.com/virtual CFO Ray. Thank you, guys. I look forward to seeing you guys soon. Thank you for joining this webinar. Stay tuned for the Keep More of Your Profits webinar series. Coming up, we're going to talk about depreciation and amortization. It is going to be mind-blowing how we're going to help you guys learn to maximize depreciation and amortization of things that you have no idea that you can depreciate and amortize right underneath your fingertips. Thank you so much, guys. I look forward to seeing you soon. Take care. Bye-bye.